Okay, welcome everyone. My name is Tracy Schneider and I am the Economic Development Collaborative's Communications and Marketing Manager. We are so excited to have you join us today. Before we get started, I'm going to review just a few housekeeping items. As this Zoom is held in webinar format, everyone is muted and your cameras are off. This is being recorded, and you'll receive an email with a link to the recording and any resources we talk about in the next few days. We'll also be sending along the presentation slides. Please submit any questions you have at any time using the Q&A button at the bottom of your screen. If you're dialing in by phone today, you can submit questions via email. Email your questions to webinar@edcollaborative.com. Again, that's webinar@edcollaborative.com. EDC webinars would not be possible without the support of Visionality. Visionality helps run the back end of our events, and their fantastic team is available for technical support. If you run into any tech issues, please put them in the chat. Today, Emily will be helping us with Q&A, and Brienne and Cecily will be assisting on the back end. Let's bring up the slides. And then next slide. Thank you. Today's event is co-hosted by the EDC and the Downtown Organization of Santa Barbara. We are joined by state officials from the California State Treasurer's Office who are ready to share state savings and financing programs for your small business. First, I'd like to share a little bit about the EDC before I pass it to the Downtown Organization of Santa Barbara and the rest of our presenters. Next slide. Since 1996, the EDC has been focused on providing a pathway to business growth, economic prosperity, and high quality of life for all. Today, the EDC serves Ventura, Santa Barbara, and Los Angeles County-based businesses, community partners, and civic leaders. Hosting the region's Small Business Development Center, the EDC provides no-cost professional consulting with a team of over 50 business advisors. You can access advising in finance, marketing, human resources, international trade, and so much more. As a community-based lender, our loan program has funded $20 million in requests and has maintained a commitment to reaching underserved communities with 67% of our loans awarded to women and minority-owned businesses. To highlight one of our main loan funds, our Disaster Bridge Loan Fund is designed to give businesses a cash flow boost of up to $50,000 at just 4.25% interest rate. All of our loan recipients are paired with advisors for consulting as well. You do not have to walk alone through this difficult moment. Next slide. Signing up as an EDC client is free, takes just a couple of minutes, and provides you with lifetime access to all of our no-cost services. Our excellent staff and advisors are ready to help you build the business that you've always wanted. You can get started by calling our business assistance line at 805-409-9159. Resources and advising are available in both English and Spanish. And calling is also the first step to learn more about our local loan program. Next slide. Now I'd like to introduce Robin Elander, Executive Director of the Downtown Organization of Santa Barbara, our co-host. Robin, thank you for joining us and for all of your support of today's event.
Thank you so much, Tracy. This is wonderful to connect with all of our state representatives and thank you so much, Tracy, for your organization's support through this really unique time, but we've been able to do so many things for our local business community. So just want to really briefly share a little bit about our organization. So Downtown Organization of Santa Barbara, or Downtown Santa Barbara for short, supports and promotes over 1,300 businesses in our downtown Santa Barbara district. We have so many new businesses that have opened up recently, and we also have the State Street Promenade, which is a new 10-block space open to pedestrians, bicyclists, where the street is closed to vehicular traffic and open to outdoor dining. So if you haven't been to downtown Santa Barbara in some time, it's definitely worth checking out. And you can find out all of our events that are coming up and all of the different itineraries for downtown businesses at our website at downtownsb.org. And just again, thank you to the state representatives who are here today, who are going to be sharing some really important information with our business community. Back to you, Tracy.
Thank you so much, Robin. And then we can take down the slides. Thank you. I'd like to extend a special welcome to California State Treasurer Fiona Ma. Treasurer Ma is the first woman of color and the first woman certified public accountant elected to the position. She has an extensive and impressive background serving the state of California, and we are just so honored to have you with us to introduce today's event.
Thank you, Tracy and Robin, for co-hosting this event today. I was actually enjoying downtown Santa Barbara on June 9th, right before the governor opened us fully, and people were out and about eating outside, and it was a wonderful place to be. And I love Santa Barbara. My husband, born and raised in Oxnard, works for the Ventura County firefighters, and so we are down in your area often. So this is a great opportunity for us to share with your members some of the important programs and services that are out there right now, not only offered by the state, but the federal government has also provided $26 billion in stimulus funds that the state will be rolling out for different programs, including for small businesses. So over the past 15 months, we have been doing a lot of these Zoom webinars. We created a dedicated email for anyone who may need assistance or is having a hard time reaching a government agency, an 800 number, a website is down. Please feel free to email us at askfiona@treasure.ca.gov. And again, today is going to be hopefully very, very informative for all of you. If there are any questions, please put them in the chat box, and we will be around after to answer your questions or to connect you to someone who can answer your questions or assist you if we cannot do so today. So again, thank you to the EDC and Downtown Santa Barbara for co-hosting us here today. And I'm going to kick it off to our first speaker, Jonathan Herrera with CalSavers.
Thank you very much, Treasurer Ma. And let me also say thank you to the Economic Development Collaborative and Downtown Santa Barbara. Really excited to join you this afternoon and share this information, talk about how California is working to address the retirement savings access gap, and yes, discuss the state's new retirement savings mandate. But once again, my name is Jonathan Herrera. I'm the Director of Outreach and Education for the CalSavers Retirement Savings Board, which oversees the program. And for those of you who aren't familiar with it, CalSavers is California's new retirement savings program designed to help the millions of Californians who don't have a way to save for retirement at their job. It was created by legislation that passed back in 2016, which requires California employers who do not sponsor a retirement plan and have 5 or more employees to participate in CalSavers, which is designed as an automatic enrollment individual retirement account, or IRA. With no employer fees or fiduciary liability. Now, the goal of this mandate and the program is to address this retirement savings access gap that we know exists in the state. We know that about half of Californians are projected to retire into economic hardship if they can retire at all. And we think that a key driver of that is that there's 7.5 million or more, that's a pre-COVID number, Californians who are going to work every day playing by the rules but lack access to a workplace-based retirement savings program. And that's important because the research also shows that workers who have access to a payroll-based way to save for retirement are 15 times more likely to do so if they have access to a payroll deduction savings plan at work. Just an easy way to save from their paycheck automatically. So let's talk a little bit more about this mandate. Can I have the next slide, please? So knowing that the best way to get folks saving and on a path towards retirement security is through the workplace. Again, back in 2016, the California legislature passed Senate Bill 1234, which did create this new mandate on California employers. And again, what that says is any business in the state with at least 5 employees, if they're not offering an employer-sponsored plan, they're going to be required to register for CalSavers and facilitate the program. So what that means in real life is employers who are already sponsoring a retirement plan are exempt from the mandate. Any employer that goes out and starts their own employer-sponsored retirement plan will be exempt from the mandate. But for everyone else, we've created CalSavers to be a really simple plug-and-play, fee-free way for employers to be able to help their employees save for retirement. When we talk about 5 or more employees, the way we measure that is by looking at the average number of California W-2 employees that you report to EDD for every calendar year. So if that number is 5 or more, then you're subject to the mandate. And I think that's really probably the most important takeaway here. But as far as employee eligibility goes, we wanted to make sure that this program was very inclusive for everybody. So any of your employees who receive California W-2 wages, if they're 18 years or older and have a social security number or an ITIN, are welcome to participate in the program and should be given access if they want to participate. But you'll notice that there's no carve out for part-time or seasonal employees, so it doesn't matter how many hours they work. If they get a W-2 from your business, they qualify and they can participate if they're 18 years or older. We also like to mention up front, you know, CalSavers is not intended to replace or compete with employer-sponsored plans. You know, as I mentioned, the goal is to address this retirement security access gap. So if we see, you know, businesses taking advantage of the plans on the private market and making access, and making these programs available for their employees, that's a win-win, because most importantly, it gives access to your employees. So next slide, please. We launched the program back in July of 2019. So it's open for all eligible businesses, but when we opened it back in July of 2019, it kicked off a 3-year phased rollout of compliance deadlines for businesses based on the size of the business. And the first 2 actually passed already. So if your business has more than 100 employees, you should have registered by September 30th of 2020. The second deadline for businesses with more than 50 employees just passed 13 days ago. So you should have registered by June 30th of 2021. So if we have any folks on this webinar who are not sponsoring a plan but fall into those 2 categories, please connect with us. We're much more interested in getting folks up and running and in compliance than sending out penalty notices for folks who haven't registered on time. But the next deadline, we're staring down over the next 11 months. The next deadline is for businesses with 5 or more employees. You'll have until June 30th of 2022. And obviously that is a very huge number of employers. I've got some local data for you in just a second. But so we're doing our best to get out in front of employers early and help them understand what the requirements are and encourage folks to get in compliance early. So you're not joining the wave at the end. Quick note though, for businesses with less than 5 employees, again, we're talking about an average number of W-2 employees that you report to EDD during a calendar year. But if you have less than 5, then you're exempt from the mandate. You can't register as an employer for the program, but we did open the program for individual participation. So you as a small business owner, or if someone happens to be self-employed, a gig worker, or if you work for a small business that isn't eligible for the program, you can actually go to our website, calsavers.com, and start your own account and start saving for retirement whenever you're ready. So next slide, please. I promised some local data. This is for our friends joining us from the EDC collaborative. In LA, Santa Barbara, and Ventura counties combined, we've identified more than 68,000 eligible employees. That's a nice way of saying subject to the mandate, which represents more than 1.9 million employees. So potentially huge impact for the region there. Next slide, please. For our friends joining, members of the downtown Santa Barbara organization, we've identified more than 1,400 eligible employees in the city of Santa Barbara alone, with more than 40,000 employees. So again, potentially huge impact just for the city of Santa Barbara itself. Next slide, please. So I know my time is short, so I'm just going to do really, really high level overview of the program and then let you know some resources that are available and ways that you can get more information if you're interested. But I think the most important thing to understand as an employer is that, we've done our best to design a program that works for small businesses. When the legislation passed back in 2016, one of the first things we did was, get together a group of stakeholders representing the small business community. And what we wanted to know is, what is it about programs on the existing market that make it difficult for small businesses to offer retirement savings? And over again, we heard the same three hurdles. It's the administrative responsibility, it's the fees, and it's the fiduciary responsibility. So we designed CalSavers to address all three. We tried to make it as easy as possible for employers to facilitate. Again, there are no fees for employers to participate. The only cost for employers is going to be the little bit of administrative time that it takes to build this into your payroll. And then, of course, employers are not fiduciaries of the program because employers are not sponsoring it. So facilitation for employers, 4 easy steps. You register by that state required deadline I already mentioned. You take a few minutes to set up your account and tell us a little bit about how you do your payroll. And then the only 2 ongoing responsibilities for employers are maintaining a roster of your employees. That's how we know, who should be eligible and who should get the opportunity to participate. And then for those employees that don't opt out, so those employees that decide to participate, you will submit employee contributions as part of your existing payroll process. And we've been working with employers throughout the state with all types of payroll arrangements, and we've seen that by and large, the CalSavers process fits in pretty seamlessly with an employer's existing payroll process. Next slide, please. Very quickly on saver features, again, with our savers, our goal was to create a program that is simple, portable, and low fee for your employees, for savers. So that begins with that automatic payroll deduction IRA. So folks get automatically enrolled at work. If they don't want to participate, they can opt out. So it comes with some standard settings, or they can customize from our very small menu of investment options to choose from. The saver keeps their account even if they change jobs, and our Roth IRA default allows for tax and penalty-free contributions. Withdrawal of contributions, so that adds a little bit of portability and accessibility to your employees. And then, of course, our goal is to keep the fees very, very low for your employees. They'll pay a small asset-based fee to cover the program administration and investment costs, and that's it. So next slide, please. I know this wasn't enough to go into the details. Hopefully that was enough to at least pique your interest. So here on the screen are some resources available where you can get some more information. It starts with our website, calsavers.com. Tons of information, frequently asked questions, tools, tips, and templates for employers and employees. We have a dedicated phone lines for savers and employers. So feel free to join or to give us a call. Sometimes you don't want to deal with a website, you just want to talk to a person, but you can do that. We also offer one-on-one support for any employers who are either seeking information or trying to get up and running with the program. That includes, in-state representatives on our field team who can work one-on-one with employers to get them up and running, and an onboarding team. We also run a series of webinars, at least for a week, where employers can get more information. So please feel free to join our webinars. I think Cicely's going to put the link in there, but that's calsavers.com/events to see a list of our webinars. But again, thank you very much for the opportunity to share this information with you. I hope you found it interesting. And if we have time for Q&A at the end, I'd be happy to answer some questions. Otherwise, you can connect with me offline. But in the meantime, I would like to hand it off to Lori Matson from the ScholarShare Investment Board. Lori, it's all yours.
Thank you, Jonathan. And I just wanted to say thank you to the Economic Development Collaborative and Downtown Santa Barbara organization for having us here today. I'm happy to share about California college savings and ScholarShare 529, which is our official college savings plan of the state of California. I'm, like Jonathan said, Lori Matson, the manager at ScholarShare Investment Board, which is a BCA at the State Treasurer's Office. Next slide. So a little bit about us. First, a 529 account, which is named for a section in the federal tax code, section 529. Lets people save and invest for college while avoiding taxes. Money is contributed after tax, it grows tax-free and compounds, and then the funds which are withdrawn are not subject to federal taxes when spent on eligible education expenses. So ScholarShare 529, which is California's official college savings plan, we've been around for over 20 years. We carry just over 12 billion in assets right now as of April. And our program is overseen by the ScholarShare Investment Board, which is chaired by our very own California State Treasurer, Fiona Ma. Next slide. So a little bit about the college funding landscape. You know, the message here is college is expensive, from community colleges through the public four-year, private four-year, all the way through living expenses on campus, off campus, and then the amount of time it takes people to pay off student debt from the time they start through, you know, graduate school, medical school, and the other types of post-graduate education programs. You know, the message is the cost of tuition, fees, room and board, it's increased 68% over the last 20 academic years. So in looking at the total student debt crisis, we're looking at over $1.5 trillion. You know, what options do we have? You know, what is it that we can do today? Next slide, please. What we can do is we can save. Even a little bit over a lot of time helps. This slide here shows the value of what compound interest looks like over time, contributing $100 per month, assuming a standard 7% compounded rate of return over time, and having that benefit of time, you know, 18 years of that tax deferred growth and the tax-free distributions. This account is basically designed to let your interest generate more interest. So if you look at the difference between what your blue line is, that is your contribution, and then the gold yellow line there, that's your growth. What that looks like over time is by doing nothing except contributing to this tax advantaged account, your money will essentially double in growth by just letting it set and grow. So that's the advantage of what a 529 account can do for college savings. Next slide, please. This slide, it's very important, but it can be very complicated too. So I'm just going to kind of give you the broad overview of what the overall message is with this slide. There are many, many ways to save for college, from UTMA accounts, UGMA accounts, all the way to the far right where you see your Coverdell savings, which are essentially education savings accounts, or ESAs. What's important to know here is each asset that you're saving money in for college, for higher education, bears a different weight against the FAFSA when filling that out for college. Now, FAFSA is the free application for federal student aid. It's a requirement prior to entering college. You have to fill it out. And what that FAFSA does is it weights these different assets against financial aid award opportunity. They all carry a different amount. So from the far left, where you're looking at the UGMAs, they can bear a weight of up to 20% against financial aid award. Certain IRAs and other retirement accounts could bear up to 50% against financial aid award. A 529 account, which is designed for college savings, only weighs 5.64% against financial aid award opportunity. So it's one of the absolute lowest and smallest amounts of weight that you can save money in, which, and I can go into details later, you can have very, very large amounts in a 529 and also open an account for only $1. Next slide, please. So here, this illustration basically shows that saving money in a 529 account, creates that tax savings that really adds up. You're avoiding capital gains. You're not having to pay those in a basic taxable investment type of an account. That money is just compounding interest and letting your money grow more money for you. So think of it as a set it and forget it type of an account. If you're going to save, look at the difference between having money sitting in a savings account versus a 529. I mean, 3 times more money by doing nothing but just letting it grow. Next slide. So as a 5th largest direct sold plan in the entire nation, we have also one of the lowest fee plans, which means more of your returns go back into your account over time, generating more money for college. Because we're direct sold, being a state administered plan, there are no commission fees, sales fees, application fees, transfer fees, all of those types of fees, which are generally seen with a broker sold account, accounts that are with banks and other types of financial institutions. So you're saving that money over time. which can be a definite fee drag on the portfolios within these accounts. So low fees, direct sold plan, and then remember at the time that your FAFSA is filled out, only 5.6% of the weight of your entire account balance goes against any potential financial aid award. Next slide, please. So oftentimes we're asked, how can you use the money? Where can I use the money? What's it good for? So it's not that you just have to use it for a four-year institution. It can be used for two-year colleges. It can be used for graduate schools, professional degrees, trade schools, vocational schools. It is now approved for apprenticeship programs. You can use it for different types of expenses. You can use it for tuition, room and board. That also includes room and board off campus, books, computers, software, Wi-Fi. If you needed a specific program for a class, it includes all of those types of things. Any type of matriculation-based expense, you can use 529 monies for. Now, keep in mind that dual benefit that you get of the tax-free growth and the tax-free usage is when you are pulling monies out for qualified higher education expenses, not for vacations, not for non-school related costs. So when you're pulling monies out and they are for those types of expenses, you can use this money at any accredited school, nationwide or abroad, not just in California. Even though this is California's plan, you can use it at any school, nationwide or abroad, as long as it's accredited. That just includes that broad list of schools, vocational, online, technical, apprenticeships, all of that. Whereas some investment type of accounts have dollar maximum and minimum allotments, a ScholarShare 529 and 529 plans as a whole, they don't have a minimum requirement per se. Some plans, if they're broker sold, might have larger initial startup costs. Ours is $1. You can open an account right now online for $1. And then you choose how much you want to invest every month. You can invest weekly, bi-weekly, monthly, quarterly, once a year with a tax return. There are so many different ways you can contribute. And then we have a U-gifting platform where you can send out a secure link to everyone you know. They can help contribute and essentially use your 529 plan as a crowdsourcing platform to grow more monies. Next slide, please. So how are your monies invested? Keep in mind, you don't have to be a savvy investor to participate in a 529 account. It's not about choosing the right portfolio. We offer over 18 different options, however, and you basically get to pick how your money is invested. You can change those investments twice a year if you wanted. The most popular portfolio choice is the enrollment year, which is based on that matriculation date of your beneficiary. So if you think they're going to graduate in 2025 and they're going to start school in 2026, that would be their enrollment year portfolio date. Similar to a target date fund for like retirement accounts. Same idea with this portfolio where your options within the portfolio shift from aggressive to conservative as you age towards that matriculation date. No need to rebalance your portfolio. It's done completely automatically, just like target date funds. We do also have a guaranteed investment portfolio for those who are not very risk tolerant and don't want to ride the ups or downs of an investment portfolio in the stock market. You can just choose the guaranteed investment and it's a specified rate of return year over year. Next slide, please. So who is eligible? A lot of information on this page. The nuts and bolts of it is anyone is eligible. Anyone can open an account. If you're over the age 18, you have a social security number or an ITIN, you can open an account. As an account owner, you always are going to have one beneficiary. You can change that beneficiary. You can name yourself as a beneficiary. You can have a relative, you can have a non-relative. You can have it your best friend's child and be saving money for them. It can be a niece or a nephew. It really can be for anyone. It's always a one-to-one ratio, one account owner, one beneficiary, but that beneficiary can be changed when funds are needed to be withdrawn. And then on the contributor side, you don't have to be the sole contributor. Other people can contribute. They can set up recurring contributions. They can make one-time gifts through that UGift platform. But it's a great way to crowdsource and fund that 529 plan so that the responsibility doesn't fall just on you. Next slide, please. So quickly, in the essence of the time here, just reminding people, recurring contributions, it's important to set up to fund because over time, your monies are going to grow more because they're compounding that tax-free growth and the interest. They're going to grow more if you make regular contributions. That being said, you can make $25 a month, $25 a week, whatever it is that you want to contribute, and that those amounts can change entirely up to you. The UGift program is a great way to have other people help crowdsource your plan and help fund it quicker. And then the far right of that screen, the College Countdown, it's an online community, very content rich, has articles for students, parents. It's kind of a roadmap from freshman year through senior year, getting ready for college. There's even a parent advisory council kind of there to answer questions and help you out along the way. Next slide, please. I did want to touch real briefly on our matching grant program. This is our 5th year of holding the matching grant program, and it is basically a dollar for dollar match for those families who qualify, meaning their annual household income has to be $75,000 or less. Their beneficiary has to be under the age of 14, and then we're going to match dollar for dollar up to $200. And then we're going to give a $25 bonus if you want to establish recurring contributions over month to month. So $200 in, we're going to match it another $200, and using that crowdsourcing feature, you can get to $200 pretty quickly. But there's more information about our matching program online, and I'll also make sure that gets put in the chat later. So with that, I believe that was my last slide. You can go to the next one just to double check. Perfect. So thank you again for your time. I'll put a couple of links in the chat. And again, if there's other questions, I'd be happy to answer at the end or offline. And I would love to introduce our next speaker, which is Kaylee D'Amico from our State Treasurer's Office. She's with the CAEATFA and CPCFA program. And she has a wonderful amount of information to share with you today. Thank you.
Thank you, Lori, and good afternoon, everyone. So as Lori said, my name is Kaylee D'Amico, and I am the Marketing, Education, and Outreach Specialist at CAEATFA, which is one of 2 agencies in the Treasurer's Office that are focused on energy and the environment. So I'm excited to chat with you today about several different programs in the Treasurer's Office that offer financing options to support energy and efficiency improvements in small businesses. And I'm going to start off with a few programs from the California Pollution Control Financing Authority, or CPCFA. Next slide, please. So CalCap is the largest program in CPCFA and has several sub-programs, but the program in general is focused on facilitating affordable and accessible financing options for small businesses. They do this by mitigating risk for participating lenders, which in turn helps them offer broader approval criteria for the loans that they offer. Loans through CalCap are available up to $5 million, and they're very flexible. They can be used for many different purposes, including working capital, startup costs, construction, renovation, and more. So to qualify for a CalCap loan, a business needs to have less than 500 employees, and many different industries are able to qualify for a loan. Next slide, please. The Collateral Support Program is another offering for small businesses under CalCap, and this is specifically designed to provide cash that covers collateral shortfalls on small business loans. This program is available for loans of $50,000 or more, and it can be used for the same flexible purposes as a CalCap small business loan. And this program provides extra support to underserved businesses or those working in the green economy and manufacturing. Next slide. Next, I'm going to talk about 2 programs that CalCap runs in partnership with the California Air Resources Board and the California Energy Commission. The Heavy Duty Vehicle Air Quality Loan Program offers financing for owners of small fleets of heavy duty vehicles to replace them with low or zero emissions vehicles. This does two things. It helps provide the businesses with more affordable loans to replace their fleets, and it helps to work towards meeting the state's emission standards for these types of vehicles. Next slide. So the final CalCAP program I'll mention today is the Electric Vehicle Charging Station program, and that's designed to provide financing for businesses to install EV charging stations at their properties. It also includes opportunities for borrowers to access a rebate later on in their loan term. Next slide. And if any of these programs from CalCAP are of interest to you or a business that you might work with, I encourage you to contact the staff at CPCFA using their email and their phone number on this slide, and you can visit their website for more information as well. All right, next slide, please. So next I'm going to move on to share some information on the programs at the California Alternative Energy and Advanced Transportation Financing Authority, which is known as CAEATFA for short. Next slide. The first program at CAEATFA that I'll mention today is the Sales and Use Tax Exclusion Program, or the STE program. So this program provides a sales and use tax exclusion to qualifying purchases that are made by businesses that are operating in the fields listed on the right side of this slide. Those fields are recycling, alternative source or green energy, advanced transportation, and advanced manufacturing. And you can see a couple of examples of business types that fall within these broader industries as well. So successful applicants to the program are able to receive a tax benefit of 8.5% at the point of purchase. So let's go through an example. Let's say that you're a business hoping to make a $15 million investment in your facility to make equipment and machinery upgrades. If you were approved for the program, you would then be able to exclude $1.275 million in sales and use tax from that purchase. There is a detailed application process for this program that culminates in approval from the CAEATFA board, which is chaired by Treasurer Ma. And the program currently receives a $100 million annual allocation that offers a maximum award limit per project of $10 million. Next slide. So this program is highly competitive, and our 2021 allocation has actually already been fully awarded, but we do have 2 opportunities for next steps if this program sounds like a good fit for your business. We're currently accepting waitlist applications should more funding become available this year in 2021, and applications for 2022 will open up later this fall. So if you have any follow-up questions or want to get in touch with a staff member to start planning how you can apply for the program, you can contact them using the email address on this slide or visit their website for more information. Next slide, please. So the last program I'll talk about today is the Small Business Energy Efficiency Financing Program, or the SBF program. This program facilitates financing options to improve energy efficiency in existing buildings. It's designed to help businesses save energy and money with no upfront cost, and our financing is more affordable and accessible than what you may find on the open market. The program offers loan terms up to $5 million with extended payback terms to help lower monthly payments. And to qualify for the program, you have to meet our definition of a small business, which is pretty flexible. You either need to have less than 100 employees, an annual revenue of less than $15 million, or meet the Federal Small Business Administration's criteria for your industry. And that can go up as high as $41 million in revenue for some industries. Tenants and building owners are eligible for this program, and most industries, including cannabis growers and processors, can qualify as well. Next slide. So this program can support many different types of projects so long as the main goal is to improve energy efficiency in an existing building. Common measures installed through the program include refrigeration, lighting, HVAC, and more. And the financing can also include some non-energy components like remodeling and repairs. And just to clarify, because I know efficiency can be a little bit confusing as to what it includes, the program currently can't finance solar and distributed generation, so battery storage or EV charging, only under certain circumstances as decided by the finance company, but generally it can't be used for those types of things. You can also use the financing though in combination with rebates or incentives from your utility. And other financing options like on-bill financing, which is offered by the utility, can be used in combination with this program as well. So you can use one financing program to cover, whatever it can cover, and then use ours to cover the rest, or vice versa. And then on the right, you'll see a few examples of real projects that have gone through the program, including a dairy farm and a bakery. Next slide, please. So the SBF program currently has 4 participating finance companies, and they offer their financing all across the state. They all have different products that are designed to meet different business needs, and they all have dedicated staff to support projects through the program. They're always happy to answer any questions from businesses who might be interested in pursuing financing for the next project. Next slide. So if you're interested in pursuing this program, you can find all the information you need to get started on gogreenfinancing.com. The process is easy, and our participating contractors and finance companies are excited to work with you on your next project. And with that, that concludes my presentation. I'm happy to answer any follow-up questions now, and I'll also drop my email in the chat in case anyone would like to reach out after the webinar. Thank you so much for your time, and now I'll pass the baton to Latavia Pineda from the Small Business Majority.
Hey everyone, good afternoon. I had to double check our time there to make sure we were afternoon. The day is surely getting away from us here, but thank you to everyone who has been able to join us today, and thank you to all of my great co-hosts today. I know I've taken a ton of notes, and I'm very excited that we've been able to share so much information with you, and I hope that my presentation is similarly informative. My name is Latavia Pineda. I am the Southern California Outreach Manager for Small Business Majority. In case you're not familiar with Small Business Majority, we are a national education and advocacy nonprofit organization that focuses on empowering and uplifting America's entrepreneurs to help you contribute to a more thriving and inclusive economy. We have a network of more than 85,000 businesses who can access our tools and resources completely for free. We have 8 offices across the country and service every corner of the country. In the realms of advocacy and education, we focus on access to capital, entrepreneurship, healthcare, workplace benefits such as retirement and CalSavers, as well as taxes. And all of this work is supported by our ongoing research that you can find at smallbusinessmajority.org. We also do a lot of work in the education world around with our webinars and seminars. Additionally, we run a resource hub called venturize.org, where you're able to find all sorts of information, including a handy dandy resource map where you're able to identify service providers in your area. So if you're ever looking for assistance for your small business, please reach out to us. Please consider us a resource hub for all of your small business needs. Today, I'm going to be talking about the California Rebuilding Fund, which is a loan program available to small businesses in California. The California Rebuilding Fund is a loan program to support California small businesses, especially those located in economically disadvantaged and historically underbanked areas of the state. The loans are flexible, transparent, and are designed to help businesses access the capital and advisory services they need to get through these challenging economic times. This program was designed by the California Association for Small Enterprises, or CAES, which is a small group of volunteers from various backgrounds and industries, including legal groups, nonprofit and non-governmental organizations, and philanthropic backgrounds. The CAES task force was established to address the lending disparities experienced by small business owners, often micro businesses, business owners of color, women, and marginalized rural business owners. The CAES task force was able to launch the California Rebuilding Fund with the assistance of the assistance and backing of the California Infrastructure Bank, or the iBank. The task force was able to raise capital to allow community lenders like CDFIs to lend more capital. So part of the problem that this program is addressing is the lack of availability of credit, which we know is crucial for small businesses to start up, survive, and grow. And as we know, typically after moments of recession, larger banks tend to pull back funding available to small businesses. And typically small businesses need additional assistance in order to be able to recover from economic hardships such as recession, so that we know This way, we know that small businesses definitely need a little bit more assistance coming out of this pandemic. And fortunately, through the California Rebuilding Fund, that assistance is provided by Community Development Financial Institutions, or CDFIs, which are able to assist small businesses that are typically left out of traditional banking systems. So you may be asking, what is a CDFI? A CDFI is a Community Development Financial Institution, which offer loans usually less than $250,000 to entrepreneurs who are typically ineligible for traditional business bank loans. And usually these loans can be used for a wide range of purposes. CDFIs are dedicated to responsible, affordable lending to underserved entrepreneurs and low-income communities. Very important to note that CDFIs are the primary institution to lend to small business owners through the California Rebuilding Fund. So before we get started talking about this financing option, I want to make sure that you all are aware of some of the questions that you should be asking prior to taking out any funding. And if you have additional questions about these, please feel free to reach out to me. So I'll just go ahead and read through these. First is, what do you need the money for? It's very important to know exactly what purposes you're planning on using the funds for. How much money do you need? Not an approximation, but a very close, precise number is very important. Additionally, sometimes what we hear from business owners is they'll say, oh, I need however much they'll approve me for, but really you want to go into the borrowing process with a set number in mind because you don't want to over or under borrow. You need to have a good sense of how long it will take you to repay that loan. How long will this be on your books? What is the term of the loan, whether that's 3 years, 5 years, or 30 years? You need to know how long you'll be responsible for that repayment. What is the current financial shape of your business to repay this loan? As we know, a lot of businesses have been borrowing more than they expected to 2 years ago. And the reason that we need to have a good sense of your current financial shape is because it's possible that you're going to be repaying debt for longer than you have expected because it's debt that you weren't anticipating to have to borrow. So it's important to have a good sense of your current books to know exactly your ability to repay. How long have you been in business? An exact date is crucial, whether that's the date stated on your articles of incorporation, the date that you got your business license, the date that you established your employer identification number, some concrete date to point to the start of your business. How much collateral, if any, do you have to put up for the loan? How quickly do you need the money? Because if the answer is tomorrow, that's going to greatly and drastically change your options. And lastly, are you seeking debt or equity financing? Meaning, are you looking for a new debt to take on that will be repaid probably with interest, or equity financing, meaning some sort of stake in your business? Now, on to some of the loan terms for the California Rebuilding Fund. This is a low interest and affordable product. The interest rate is 4.25%. The maximum loan size is $100,000 or up to 100% of average monthly revenue for a 3-month period prior to COVID-19. This has a 60-month loan term, which is 5 years. You will be making interest-only payments for the first year, and there are no prepayment penalties. So in the event that you come into some additional cash a little faster and you're able to repay that loan, you won't face any additional penalties as a result of doing so. A little bit about borrower eligibility. This program is for businesses with fewer than 50 employees. This is for-profit businesses only. A personal guarantee may be potentially required at the discretion of the community lender. Signature will be required by each owner with greater than 20% of ownership, and this must be verifiable via the loan applicant's tax return. Some additional profitability information. The business must have experienced direct economic hardship from COVID-19, demonstrating a 25% decline in revenues since January 2020. Annual business revenues must be less than $2.5 million. There may not be any active bankruptcies or 30+ day delinquencies in January or February 2020. Prior bankruptcies won't necessarily affect your ability to qualify for this product. However, the bankruptcies must be resolved, so they cannot be active. Some more about borrower eligibility. The borrower should have no repossessions or foreclosures in the past 36 months, no outstanding tax liens or judgments unless there is 6 months of an active payment plan, no unpaid child support. Additionally, no minimum credit score is required for this program. However, credit is set to the discretion of the lender. At the time of submitting your pre-application, which is available at CALoanFund.org, you do not have to submit any documentation. However, later on in the process, you may have to provide a schedule of ownership, an attestation certificate, which will be provided to you by the lender, bank statements or other proof of revenue, your 2019 federal tax documentation, potentially a personal guarantee, and evidence of your organization's legal formation, which can include your business registration, conflict of interest terms, etc. Now, there are some ineligible industries when it comes to this program. Those include businesses that includes firms engaged in activities that are prohibited at the federal level, businesses engaged in speculative activities, facilities primarily used for gambling or to facilitate gambling, and firms engaged primarily in lobbying activities. So you may be saying, okay, Latavia, you've provided me with a lot of information about the California Rebuilding Fund. How do I actually apply? What do I do next? The answer is that you can apply to this program at CALoanFund.org. On that website, you will see a few different tabs, including an overview, loan terms, business requirements, frequently asked questions, resources, and the pre-application. I encourage you to look through those first 5 tabs before clicking on that last one, pre-application, to make sure that you have all of the information you need to make a knowledgeable decision about this program. Once you have read up on the program, you will click on that pre-application button and answer, I believe it's a set of 12 questions about your business. From there, you will be potentially matched with a lender who you will connect with, and they will send you their full application. And that's when you'll start going into some of that, providing the more detailed financial information about your business, your documentation, your credits going to be run, etc. I do also want to note that, of course, this program will not work for everybody. There will be folks who do not qualify and are not matched with a lender at the end of their pre-application. In the event that you do not qualify and are not matched with a lender, you will have the opportunity to connect with small business technical assistance providers, including small business development centers, women's business centers, and SCORE mentors. And this will all help you to become more loan ready or identify another affordable loan product that is better suited to your business. One example that I often give is that while this, one of the lenders that works with the California Rebuilding Fund is Working Solutions, and Working Solutions may not be able to approve you for that 4.25% interest, but they may be able to approve you for a different product at a slightly higher interest rate. So it's very important to keep doing that follow-up and ensuring that you are getting connected with the right product for you. And additionally, if you have other questions about CDFIs, other borrowing opportunities, other questions about anything that we have discussed today, any of the work that Small Business Majority does, you can visit venturize.org, which is a free online resource hub for small business owners like all of you. Additionally, if you'd rather just talk to somebody, here is my contact information. Always more than happy to help answer any of those questions that you may have. Feel free to give us a call or shoot me an email. And with that, I would like to pass it on to Emily.
You are wonderful. That was everyone. Thank you all so much. I'm also a small business owner, and this information was so great and so helpful. And actually, Latavia, I think our first question is going to be for you. Are the tax liens for the company or the personal?
I unplugged my headphones right as you started talking. Could you possibly repeat that question for me?
Yes, so the question is, are the tax liens for the company or the personal? So the limitation on having tax liens to apply for the program.
It will depend on the structure of your business, the legal formation of your business. So if you are a sole proprietor, then it would affect you negatively. However, if you have a different corporate structure, it will depend.
Excellent. All right, this next question is, does CASE provide refinancing of existing loans or only new financing?
That's a great question. So under the California Rebuilding Fund, you cannot refinance a loan with that loan, essentially. However, there are other options. So definitely reach out to us and we can connect you with a CDFI that may be able to refinance that existing loan that you have potentially at that lower interest rate with some technical assistance.
Yeah, I want to make a plug for all you business owners here. You know, having debt can be a natural part of owning a business. And look at that interest rate. There may be an opportunity either to negotiate with that lender or to refinance into a lower product. That's something that I recently did, and I didn't even think about doing it before. So thank you for sharing that. We only have one more question in the Q&A, so if you're here with us, go ahead and put your questions into that Q&A. So this question is, I think this is for Jonathan. Is the pay period our company's pay period or a different set period? For instance, we pay weekly, so we'd send on the contributions weekly.
That's a great question. So it would be based on your company's payroll or pay periods that are set by your company. So if you pay weekly, you'll make your employees' contributions weekly. But don't worry, we do work with a lot of employers that do weekly payrolls, even ones that have weekly payrolls for you know, very, very unique types of employees. So, you know, if you're worried about that part, please connect with us. We can help you get going.
And Jonathan, I love this program so much. At Visionality, we're really making this push on not just a living wage, but a thriving wage. And saving for retirement is so important to your employees feeling safe and secure and being good members of society. And guess what? I'm a business owner, and when my employees feel that way, they do better work and they can really bring their whole selves. If you're always worried about money, you can't worry about what you're doing at work. So I just want to thank you for representing this really incredible program and helping us all help our employees really show up as their best selves.
Really appreciate that. Thank you.
So we've come to the end of our questions. So everyone, if you're still with us, go ahead and pop those in the Q&A.
We do have one right here in the chat, Emily, if you want to pull that up. Thank you.
Yes. Where is that, Cess? Why don't you go ahead and read it, Cecily?
Oh no, sorry, that was information that Lori posted in the chat. My bad. Sorry, but if you do have more questions, please drop them in the Q&A chat for us today, everyone. Thank you.
Yeah, and why don't, if anyone, yeah, Lativia.
I have a question for Lori, actually. That was a super informative presentation. Thank you so much. And I was wondering, does the beneficiary of a 529 account have to live in California or just the contributor?
So actually neither. You can live essentially in any state in the United States and open a ScholarShare 529 account. So that's a great question. You can open an account no matter where you live. You can also use the funds in any state. But if you were to open an account today and the beneficiary did not live here, that's totally fine as well. So you as the account owner would be the contributor from your end, and then you can also crowdsource that through the eGift platform.
Very cool. Thank you.
Yeah, you're welcome.
And Lori, we have one more question for you, I think. And it was just a question. You had gone through a couple of statistics about like the average cost, the average burden to go to school. And there was a question around the average tuition. One of our attendees thought it was closer to 40,000, so 40,000 a year. So could you speak just a minute about where those numbers came from and enlighten us a little bit?
Sure, I can do that. Let me grab my my slide. Actually, I don't know if I can pull up my slide. Basically, those numbers were an aggregate, not just of tuition, but those numbers also were inclusive of potential room and board fees and books. So it was kind of a total overall estimate aggregate of those numbers. So whether that looked a little high or low to you, depending on what you were considering that average tuition amount to be for, that $40,000 number. may or may not have included those other aggregate adjustments for other costs. But I'm happy to speak to you individually or offline, and the collegeboard.com or the collegeboard.org has all of the up-to-date numbers on every single 2-year, 4-year private school, public school in the United States.
Thank you so much. And we had one more question for some contact information. So I think, LJ, we chatted that to you directly. So I think last chance for questions. Robin just put a plug for downtown Santa Barbara in the chat. Thank you so much. And my friends, I believe we've come to the end. So Tracy, why don't you give us the old send-off?
Thank you so much, Emily, and thank you to all of our presenters today. And of course, limited questions means that you just did a fantastic job and that you covered all the information that everyone was looking for. But of course, we'll be sending out the follow-up email with the recording of today's presentation. So in case you missed any information or you want to go back and grab contact information, it'll be there for you. We hope that you have a wonderful rest of your day, and we thank our presenters and attendees for joining us. Thank you, everyone.